What I want to do today is a little bit of scene setting. There's a whole different range of people in the room. Some of you are experienced crypto traders, and I'll ask you to bear with us a little bit while we give some background. And some of you are hopefully crypto skeptics. Our Chief Technology Officer, Mark Bainbridge, is an absolute crypto skeptic, which is one of the reasons we have him on the team, because that's actually what we want. Our COO, Rishi Kerr, is going to talk in detail about Metalicoin a bit later in the day, and we hope you'll agree with us that it's an amazing opportunity. But I just really wanted to set the scene and talk about why crypto really is the next trillion-dollar market, and in fact, bigger than $1 trillion. Of course, we're a tech company, there we go. So, I mean, all of you in the room will know that cryptocurrency is hot. You're starting to see it in the mainstream news. You're getting people like central bankers and the head of the American Securities and Exchange Commission coming out and saying it's a scam, or it's this, or it's that. It's starting to pervade the mainstream consciousness. But the reality is it's not quite ready for prime time yet. And it's not quite ready yet from a technological point of view. And we'll talk about that a bit without dragging you into bits and bytes. Or cryptographic hashing algorithms. I promise you there will not be a single one of those mentioned in this talk. But also from a regulatory point of view. But look, and the reference from Ripple is absolutely spot on. It's pervading the popular imagination, and we believe that it's actually about to go really ready for prime time. So, just very quickly, we'll look at other trillion-dollar asset classes and just give you very briefly why crypto is set to take its place amongst them, based on the power of cryptocurrency itself and how it works, based on the evolution of where it's come from and where we believe it's going, and also the fact that it's actually becoming a properly investable asset, which to date there's a market, but it's not what you'd call a properly investable asset class just yet. So let's crack on and look at some trillion-dollar markets. Perth, we don't need to tell you all about the wonderful value of physical metals. Physical metals trading is about $2.7 trillion a year globally. Derivatives on that, depending on how you measure it, and even people like the Bank of International Settlements and the World Bank argue about it, but that's somewhere between 10 and 100 times that value in the derivatives market. So metals, physical, useful, valuable, and I think particularly in Perth at the continuation of the Precious Metals Investment Symposium, we don't need to tell this audience too much about precious metals. But equities, again, everybody, I'm sure everybody in this room owns some stocks. Global value is about $80 trillion. It's been around since the 1600s from the initiation of the Dutch East Indies Company out of Holland. And again, pretty well understood market, gives you ownership rights and dividend rights in companies. Interestingly, Australians aren't that into bonds. It's somewhere in the order of a $90 trillion market globally, so it's bigger than equities. And essentially, you're lending big corporations money for no security on the hope that they'll pay you back. So, and generally they do. Sometimes people invest in so-called junk bonds at a higher return, and every now and again they get paid back as well. Real estate, now this figure is actually from the institution that looks at investment property. So clearly the value of all real estate stock is probably 100 or more times that. But just investment property, purely as an investment class, is around the $8.5 trillion mark. So clearly physical property, we all understand that pretty well. Derivatives are really tough to measure, as I mentioned, but the derivatives market dwarfs the global GDP by 10 to 100 times. And that, some people, probably Bron Siceki, who's in the audience being one of them, think that that's pretty dangerous and a threat to the system, but nevertheless, derivatives are there and they drive an enormous amount of volume. The thing that we see in crypto is we believe it's about to take its place amongst those multi-trillion-dollar assets. And the reason is, bless you, the reason is that this is a different kind of asset. It's digital, but it can represent physical. It's readily exchangeable, and it's based on some some properties that make it really interesting from an asset point of view. But the point is, it's different to all those other trillion-dollar asset classes we've seen. It's not just a reflection of them. So what is it that makes crypto so interesting? And again, for those of you who are experienced traders, bear with me. But for those of you who are a bit new to it, hopefully this is a very quick non-technical primer. The first thing is you'll hear a lot of people and critics say, oh, Bitcoin and cryptocurrency, it's all BS because it isn't backed by anything. Well, neither is the money in your pockets, and certainly neither is the digits that you have on your online banking screen. But leaving that alone for a moment, crypto is backed by something. And it's backed by the same thing that makes planets go around the sun and makes your water get hot when you add energy to it, and that's really smart math. And the advantage of something that's backed by really smart math is that it can't be corrupted. It doesn't need votes. It doesn't need to make anybody happy. So it's really difficult to corrupt the math. And without boring you, I promise you there'd be no hash functions and all this. But the thing you need to take away is that the math is really powerful and it works. And it ensures that cryptocurrency is very well protected. Now, this statement, trustless, it's a weird word, right? But what it actually means is that the network, the systems that move the cryptocurrencies around, doesn't need a centralized trust agent in order to ensure its function. The network itself provides the trust. And the contrast to that is, what do banks provide? Well, in this country, you might argue not much given the Royal Commission, but the only thing a bank provides is trust. Right? You trust them to hold on to your assets and to maybe give it to you when you ask, or to give it to somebody else when you ask. That's their main function. Same with insurance companies, same with brokers, same with agents, et cetera, et cetera. Cryptocurrency doesn't require that because the trust is built into the system. And again, very powerful. It's immutable. Now, again, that's a fancy term. All it means is once you put some information into a blockchain, which is the underlying technology that drives cryptocurrency, you can't change it. Or if you do change it, if somebody tries to hack it, everybody can tell. And again, that's very powerful because we've seen Ashley Madison and all kinds of other scams and scandals where things have been hacked and changed and compromised. When you've got a blockchain-driven cryptocurrency, it's so far proven impossible to change things and to hack it without it being obvious. And it's decentralized. And this is a partner to the trustless thing, but it means that the network can run without a central authority and still run properly and still allow people to exchange value. So, and the other thing, which is a real departure from physical property, physical metal, and even shares, is that you can actually build a lot of complexity into a crypto asset. Because it's a piece of programming code at the end of the day, you can make it do interesting and complex things that you can't really do with other asset classes. And at the end of the day, that's the killer about cryptocurrency, is that you can actually put a lot of complexity into an asset itself. And the market and the capabilities are evolving really, really rapidly. So the first generation, Bitcoin and its cousins, solves one really interesting problem, which is called the double spend problem, which means that, what does that mean? If I have a digital asset, a photo, a movie, a piece of music, if I send it to Rishi or I send it to Mark, I can send it to Andrew, I can send it to 100 different people. So it actually doesn't have value, right? But if I pull a $10 note out of my wallet and give it to Kerry, Kerry has it, I don't, I can't spend it again. What Bitcoin did, and the blockchain behind it, was come up with a really smart, mathematically backed, immutable, decentralized way to allow people to transact these digital assets and make sure they couldn't double spend them, and therefore they have value. They have scarcity, there's only 21 million Bitcoin, there's only a limited supply of other Bitcoins, of other cryptocurrencies, excuse me. So they have some value because I can't spend them twice, and I don't need a centralized authority like a central bank to manage them. So that actually solves a huge problem. That means that the internet can now become an internet of value, and that's what we saw with Bitcoin and some of the other early cryptocurrencies. Then along came a really smart 18-year-old Russian called Vitalik, created a thing called Ethereum. And the whole innovation with Ethereum was to make money smart. Okay? Again, if I hand Kerry that $10 note, she can go off and spend it, it's done. But if I want to buy a car or a house or something from somebody, I have to have complex contracts. Money has to be put into escrow. You can release a deposit. You can't release a deposit. With a smart contract-driven system like Ethereum, you can build a lot of those smarts into the money. So I could buy an insurance policy from you that if I don't get on my plane, I get some money back for the fare. Okay? Now, we could write that into the cryptocurrency. I could send it to you. You can't do anything with it yet because the trip hasn't happened. You get a feed from the airline with the passenger list. Once the plane departs, Jeremy Samuel's on it, nothing happens, you keep your money. Jeremy Samuel's not on it, automatically Jeremy gets the money back, you get your commission. The whole thing is controlled by this decentralized network. So you don't need an insurance company, for example. You don't, and by the way, you could just have a platform where people contribute funds into the underwriting pool and it gets distributed and the profits come back and the whole thing can be managed programmatically by the money itself. Now that, again, is a really, really, really powerful innovation. It's not perfect. As I mentioned earlier, the tech is not quite ready for prime time. So, Visa or MasterCard go, oh, well, that'll never hurt us. It only does 5 transactions a second, and we do 5 million transactions a second. I will remind them that the very same people at Kodak said, nobody's ever going to use digital cameras. The resolution is crap. You all know that, 3 years later, Kodak was in Chapter 11, and digital photographs are at 10 megapixels per image, and who the hell uses film anymore? I think the incumbents are making much the same argument today, and that innovation of putting the smarts into the money is actually what kicked off the whole boom in interest in cryptocurrencies in 2016 into 2017. Because frankly, with the phase 1, with Bitcoin and a couple of its forks, nobody really gave a crap. I mean, a few geeks did, and a few people who wanted to buy illicit stuff on the Silk Road on the dark webs did, and a few people who thought it was interesting played with it, but nobody really cared. I mean, if you actually look at the price graph of Bitcoin from 2010 to 2016, it largely bumped along. It kind of gets up to $100, and all the people who got it for 5 cents went, woohoo, and I'm selling. And it's gone up to just on 20,000. It's now at about 6,500. I'm quoting US dollar figures, by the way. It translates, obviously. But, so that was Bitcoin. But nobody really cared about it until Ethereum came along 2014, 2015, started to be able to create all of these coins with their own smarts in them. And so that's a massive, massive innovation. But as the man says, wait, there's more. And this isn't the steak knives, this is the actual offer. What we're seeing now is the emergence of what's called asset-backed cryptocurrencies. And this is really interesting because not only is it a distributed network where you can transfer digital assets and make sure they're not double spent and it's cryptographically secure, not only can you write smarts into the money itself so that it largely self-executes the contracts and the terms of it, but now you're starting to see physical, real-world assets, and particularly assets that are largely illiquid or hard to trade, being put into cryptocurrencies and made highly liquid. So, Rishi's going to talk about Metalicoin in some detail, but the basis of what we're doing is taking metals, whether they're still in the ground, being explored, whether they're rods, pipes, meshes, or anything in between, concentrates, spot metals, and saying that you can freely trade a fraction of those on a highly liquid global market. Now, that's something that's really hard to do with any other form of asset. And bless you. This is why we're arguing that crypto is a new form of asset class, because of the complexity that you can build into it, because of its power and capabilities. You really are seeing something new and different in the financial markets. So, and there's a term that I'll come back to with a lot of these asset-backed cryptos, and you'll hear about other things today. Liam Twigger is going to talk about a very interesting gold-backed token and a number of others, is the term security. Now, again, I'm not a lawyer, without going into legalese and jargon. The first wave of cryptocurrencies that you could buy through initial coin offerings and stuff, they went to great lengths to say these are not securities in the legal sense. So it's not a share. It shouldn't be regulated by the Securities and Exchange Commission in the US or ASIC in Australia or the MFA in the UK, etc. It's a utility. In other words, what's a utility? Well, if I buy a ticket to Disneyland, that thing isn't useful. I can't go to a different theme park and say I want to use this ticket. It only has use if I go into Disneyland. The difference with all these cryptocurrencies, so the idea with a lot of these cryptocurrencies is they said, well, no, it's not a security. People aren't buying it as an investment. They're not trying to make money off somebody else's action, so it shouldn't be regulated. It only gives you access to our particular Disneyland that we're building. And to an extent that's true. The difference is there's no public exchanges online for Disneyland tickets where people are expecting to make 10 to 100 to 1,000 times the returns, whereas in fact there obviously has been for the cryptocurrency market. That market's gone up, it's come down, it's struggling, but that's where the initial wave of crypto and ICOs were. What you're moving into now is a region where securities tokens will be regulated. Utility tokens will continue to exist, and I get in a bit of trouble sometimes. People think I'm dissing them. They have a value, they have a place. But by way of comparison, the market capitalization of all the cryptocurrency markets as of yesterday was about $220 billion US. Now, I don't know about investors in this room. For me, that's a lot of money. For the capital markets, it's a drop in the bucket. As you've seen, the value of equities and bonds combined is about 170 trillion, and that's before we count the derivatives markets. So whilst crypto's grown and been fantastic, from a financial markets point of view, it's still an absolute drop in the ocean. I'm going to argue in a minute that as you move into securities token land, yes, you're going back into the evil empire, and Jeff Berwick's probably going to take exception with some of the stuff we're talking about from a regulatory point of view, and that's great. But I'm a simple guy. I follow the money. The money is in the institutional investors, and they can really largely only invest in securitized assets. So that's a really lovely segue. I love it when that happens, into the next part, which is, okay, so the technology is becoming ready for mainstream, ready for the prime time market. It's not quite there, but it's getting there. But also from an investment point of view, we're on the cusp of getting to the point where cryptocurrency will become a really investable asset class. So the first thing is what I like to refer to as the regulatory holy trinity. Not being Christian, I can do that, I think. But that is, in order for an asset class to thrive, you need regulatory certainty. So absence of regulation is actually a problem. It allows cowboys to come in, it allows scammers, it makes people nervous about the market. Investors and consumers like regulatory certainty. And of course you'd like to, from an industry point of view, you'd like to argue those regulations should be friendly and easy to follow, et cetera, but not having any regulation is actually a problem. So you're now starting to see quite a few jurisdictions, be it Malta, be it Lithuania, Gibraltar, Singapore, even the Australians are kind of taking a, here's a set of guidelines, don't screw up approach, rather than a here's a regulatory certainty approach. But ASIC is actually quite open to some cryptocurrency activity, as long as you're not actively decepting investors, which we think is a pretty good idea not to do. Banking is a big one. There's a number of jurisdictions that have reasonable crypto regulation, but you can't get money easily or readily from your cryptocurrency account into a fiat currency or money backed bank account. So all this theoretical wealth that you've generated isn't much use. That's a problem that they actually had in Malta. The Maltese regulations make the Maltese banks take cryptocurrency deposits in and out of exchanges, but none of the other European banks will allow the correspondent banking regulations to let you get the money out of Malta. So you can go make $1 billion. I've been to Malta a couple of times. It's a cool place, but it'd be difficult to spend $1 billion there. You could have fun trying, I'm sure, but it's not quite it's not quite there from a banking point of view. And of course, taxation is important. I mean, hands up anyone who loves paying tax, right? Nobody, but
Only from anyone.
There's one guy. I want to talk to you later. But I mean, having to pay tax is a good problem. It means you made a lot of money, right?
Exactly.
But the point is, again, you want some certainty. And the ATO is just kind of going, well, we'll just take everything and sort it out later, which is kind of the typical ATO approach. Doesn't give you a lot of certainty. It doesn't allow you to do your tax planning. You are starting to see some interesting taxation things. You're starting to see some of the special economic zone areas come out and say, well, we'll give you 5% or 0% tax on cryptocurrency gains if you base yourself in our special economic zone, and we'll have some regulation. And by the way, we're one of the groups I'm doing some work with has just gotten a full crypto banking license in the Caymans that gives them onshore and offshore crypto and fiat banking exchanges, asset custodianship, and loans. I'm not doing a spruik for them necessarily, but I'm saying it is coming. There was some news just late last week that a group in Switzerland is applying for licenses to do similar things. So the banking challenge is being solved. The regulatory challenge, there's a bit to go. I mean, I heard the head of the European Central Bank regulatory unit in January in Vilnius, of all places, at a blockchain function, say, we don't care about crypto, we have no interest in it, we're not going to do anything about it. I think the ECB is pretty rapidly going to have to change its tune. They're putting a lot of pressure on Malta not to do it, but Malta and others are putting pressure back on them. So I think you will find that the regulatory situation is starting to resolve. Even the SEC in the States, which has been seen in some ways as the most anti-crypto. I mean, a lot of initial coin offerings just exclude Americans, which has been smart if you're trying to say you're a utility token, because the SEC is going, no, you're not, you're a security. We don't care what you say. And we'll put you in jail if you sell this in the US without registering with us. So it's been pretty prudent to avoid it. We're actually going down a path of doing a full registration with the SEC as a security. It's going to cost us about $1 million US and make me spend a lot more time with lawyers than I ever wanted to do. But it will put us in a position where we're able to sell to any US investor, including Wall Street institutions, and I'll get to that in a minute. So we think it's worth the effort. So the regulatory trinity is actually slowly coming together. I mean, you still might be 18 to 24 months off it being really clarified, but there's movement in the right direction. I mentioned the move to securitization. This is really, 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 really important because of the asset classes we talked about, okay? Your institutional investors can only really invest in securities. So 80 trillion in equities, 90 odd trillion in bonds, derivatives. They cannot invest in these things called utilities. They just can't. It's not in their investment mandate. So people have set up funds. There's a really smart guy called Novograd who set up a thing called Galaxy, listed it in Canada, raised about 240 million to invest in cryptos. Okay, and they're investing in some ICOs and some blockchain businesses. But it's an indirect investment, okay? Your Goldman Sachs, your Merrill Lynch's, et cetera, cannot go and invest in an ICO because it's not a security. Once coins become securitized, those investors, those big institutions, can invest in them directly without a middleman. And I was in the States in May for the Consensus Conference, which, Kerry, you're going to cry, 8,500 people crammed into the Hilton in New York. You couldn't move. It took 2 hours to get into the frickin' place on day one. It was a bun fight. But a lot of that was institutional and corporate types trying to figure out what the heck's going on in this space and how they can get money into it. And the answer is they can invest in securities and in securitized tokens, and they can't invest in utilities directly. So they have to go through funds and things. So that move, I mean, when you talk to Americans, it's all about security tokens. Now, there's a couple of challenges, by the way, and again, it's not a technical thing, but once it's a regulated security, everybody's got to do your like you open a bank account, you have to do your know your customer checks. You have to register yourself. Now, to buy Bitcoin or Monero, which is, by the way, just a segue, if you really want anonymity, Bitcoin is not anonymous. If you genuinely want to move money around through cryptocurrency where nobody knows who the heck you are, you need to use Monero or Zcash. The whole myth that Bitcoin is anonymous, forget about it. They can trace about 90% of Bitcoin wallets back to a bank account. Monero and Zcash, much harder. But the point is, with security tokens, it's like buying a share. You've got to go in and get an account with your broker. They need to know who you are, register your driver's license, KYC, if you're in Europe, they want to know sources of funds. Where did you get the money from? I was like, I stuck up a bank. What do you, I mean, you know, but they genuinely ask you that. With security tokens, you'll be subject to all of that. And of course, governments and regulators are going to want backdoors so that they can go and get funds back and things like that. They probably won't be instituted because it breaks the system, but there will be more of a process, much more like opening a traditional, you know, share trading account or metals trading account. But it opens the floodgates to trillions of dollars of institutional funds, and that's the real key, and that will, by several orders of magnitude, overpower any of the sort of regulatory hassles around security tokens. So very, very important, and coming soon, open security token exchanges where there'll actually be a secondary market that people can trade them on, which is also pretty important for an investor. And as I've mentioned, the technology is being built out very rapidly. I mean, Ethereum itself has billions of dollars in cash reserves from holding tokens. There's a platform called EOS that raised $4 billion and now actually has $1 billion fund to give money to people who want to build on their platform. Yes, we're trying to talk to them. There's about 8 other platform protocols like those that have funds that are willing to invest money in projects just so that you'll use their platform. And the technology ecosystem around the blockchain and cryptocurrency is evolving super, super fast. All of the big players like Oracle, Microsoft, SAP are all creating blockchain offerings. Interestingly, the IBM one doesn't let you create coins, so it's really for corporate database applications. But I happened to be placed next to in line the head of that project for IBM, and he said, "Yeah, of course we're putting tokens on it really soon because we realize that cryptocurrency is the tokenization of trade is really the killer app for this technology." So the big tech players are in it. There's thousands of startups in the tech side of it, and the technology is really moving very rapidly to a point where it's going to be great. And this is, I've sort of alluded to this, but the institutions have billions and billions in pent-up demand that they would like to put into this space, and they're looking for vehicles to do it. And as soon as you really get good securitization, as soon as the tech's there, the regulatory environment's a bit better, that money will flow very fast and very hard. And we believe that's what will drive the next really big uptick in the cryptocurrency market. But you'll be looking then, as we come back to, into the trillions, not into the billions as we've seen so far. So hopefully I've made my case to you of why we believe cryptocurrency is the next $1 trillion plus market, why also we as a company are going down a very expensive and tedious regulatory route in terms of sort of getting under compliance with where the regulators are going. And hopefully that's set a scene for the rest of the day. I haven't focused a lot on the link between cryptocurrency and metals. In the minute and a half or so that I've got, I do just want to talk about that really quickly. The first phase of crypto, the bitcoins, etc., actually look a lot like precious metals in the way they work. They don't necessarily have much intrinsic value. I mean, gold's pretty, and you saw from the figures if you were here yesterday that a lot of it goes to make jewelry. But gold has value because people agree it does, and because it's transportable, and because of some of its chemical properties. It doesn't rust and those sort of things. Cryptocurrency has value because people agree it does. It's even more readily transportable. What do I mean by that? Well, when I used to run a gold refinery, I used to do deliveries of bullion. I'd have $500,000 of gold bars in my old satchel in a t-shirt and torn jeans, and I'd be walking down Collins Street and nobody knew. So that's pretty transportable wealth. With cryptocurrency, I could have $50 million worth of value on a USB stick in my pocket. Now, you don't want to lose it, and you don't want to lose the password to it because there's no way to get it back. But that's very, very readily transportable. And it doesn't even need to be on a USB stick. I can have the recovery seed on a piece of paper in a notebook somewhere, and then I'm effectively carrying that $50 million. And they're globally accepted, and they do have some very similar properties. As we move into asset backing and make different classes of metals and other commodities highly liquid and tradable, the analogy and the nexus between precious metals, other metals, and cryptocurrency becomes even stronger. And that gets me exactly to the end of my time. So thank you all very much for your attention and for coming along today.